Hello, everyone. Welcome to another Mortgage Leadership Outlook. So excited for you to join us again here today. We're very, very excited about today's guest. But listen, before we get started here, I'm curious actually, please do me a favor and get this message out there. Please let people know that we're doing this live, doing this now. But before we get started, I want to know if you have had any kind of interaction with borrowers about talking about forbearance. So please just do me a favor in the comments, tell us a little bit about your experience of what you've been doing. Have you been making phone calls and getting a lot of feedback? Please let us know actually, what you're seeing out there, the conversations you're having. Use the chat box, talk to us, tell us, and we will address actually any questions that you might have. So without further ado, I am super excited to introduce you to today's guest, none other than Carissa Robb, who's the president and COO of Constant AI. Thank you so much for joining us, Carissa.
Thanks for having me. Super excited to be here.
Yeah. So now you are a stranger to working from home for the most part, right? You guys are normally in an office meeting face to face, right?
Yes, absolutely. We've got certainly experience working from home, but our group is used to being right in the office together, collaborating, and we're adjusting, but it's going pretty well so far.
Well, you have two coworkers there to kind of help you, right?
Two coworkers. They're quarantined in the TV room downstairs, but 3 and a 5-year-old that just certainly make it an interesting.
Fantastic. So listen, I'm gonna let you. I want you to talk about Constant AI because there's two reasons. One, I'm not sure that I fully understand actually the technology that you guys do, and I can't say it as well as you can. So please, actually, I'm gonna let you talk for a little bit. I'm gonna invite some people, make sure people know that we're doing this live. But again, if you are watching this live, please tell us actually about any interactions that you've had with your borrowers about forbearance, about questions. Please use the chat box. Tell us actually, if you've had conversations, if you've been reaching out to your borrowers, or if your borrowers have been calling you, please use the chat box. Let us know. And Carissa, take it away. Tell us how awesome Constant AI is.
Sure will. So we started developing a fintech lending solution a couple years ago, and then in preparation for what we thought would be kind of Q3, Q4 market compression, heading into some sort of recession, we really wanted to give our own borrowers a self-service solution to stay ahead of the curve and make sure that if delinquency trends started to tick up a bit, we were prepared in a way that was sustainable. Certainly Q3, Q4 was accelerated with the COVID just global crisis, and we made the decision to really focus on expanding this software solution to servicers and investors. The more we talked about it, the more interest we got. And this was where we felt we could really contribute to simply doing better by the homeowner. So we've applied a lot of automation, a lot of logic, and a lot of experience into crafting a software solution that we think is going to impact where we go from here.
Fantastic. So listen, you obviously you went to school for mortgage banking and to be in the loss mitigation business. No, that's probably not the case. So talk to us a little bit about that, because I just think it's really amazing how we look back actually, you're relatively new into the banking space, and especially actually since 2008 actually you joined TD Bank and quickly rose to the ranks there to become the senior vice president and you would help to develop their loss mitigation program, distressed real estate, and I tell us a little bit about that experience at TD Bank and how you actually rose so quickly in the ranks over there.
Sure. I have a very unique background, and one that I'm super appreciative of. So I joined TD Bank actually in 2005. I was on the collections center. I joined as a collector. So making the phone calls, talking to the borrowers about hardship. It's a very personal experience to go through that. And that's how I learned banking, from the point of view of folks that were struggling. So left and went to law school, and also worked at a nonprofit focusing on consumer advocacy during the mortgage crisis, and then came back to the bank to build out loss mitigation during the crisis. And so at that time, it was just rapid acquisition, a lot of stress from the failed banks. And so I had a lot of opportunity and one thing I will say, I learned how to do things the right way, by the customers, by the regulators, and just an incredible experience, and background that has really helped to get me to be able to offer this solution more broadly.
So, and I mean, that's from your experience as a collector, right? I mean, you were calling people when they were, 2-3 months behind on their mortgage. You were the person actually that they would hear on the other end of the phone, right?
Yes, I have such a soft spot for back office, and the folks, there's people on both ends of those telephone calls, and there's real personal pain points and hardships from the borrowers, but to be the one on the other end of the call that's listening and trying to help, be a part of the solution, it brings a different perspective, being in those trenches and really being able to experience the various components of financial hardship.
So now going back, actually, when you first started working, when you were first, making the phone calls, so any idea of what percentage of borrowers that you would actually be able to help, or what percentage of borrowers that, were just, you knew actually that they were starting a process that was going to end ugly?
Sure. So I will say I treated collections really like kind of like a sales process, essentially. I mean, you certainly had folks that were strategically calling in to say, can't do it, can't pay. And there were varying degrees of truth to that. But for the most part, there were a lot of people that were just really looking for answers and looking for help. And they weren't really sure what to do or where to go. So part of my focus, and certainly the focus with Constant, was you want to build that relationship and be the person that they do want to engage with, that they really believe has their best interest to get back on track. And there's that feeling of being a genuine solution or partner in the collections process, I think, is really important.
Interesting. So it's, and one of the things that a lot of people have been talking about is all about empathy. Yeah. So it sounds like actually, your career started where you kind of had like empathy kind of baked into the ingredients from when you were starting. Now, when you actually started to develop these programs, the loss mitigation programs for the bank, did the banks have that same kind of like empathy, or was it just hey, listen, we're not going to make a lot of money on this, so we need to do whatever we can to make sure we keep them on the books?
Sure. I definitely worked for a company that was customer first. And so they took a lot of pride in making sure that we were solving the hardship, we were solving the problem. We were being responsible, not just to the bank, but to the consumer. So that should be baseline for any bank or custodian really of a borrower relationship, that the customer's got to be part of your focus and in creating those programs. And there's room there to continue to evolve and expand those programs so that we do keep that borrower at the center point.
So, and keeping that borrower at the center point, where are we today compared to 2008? And talk about actually, I want to know the comparison of the volume of activity that people are getting, the phone calls that they're getting, and then I also want to know about the empathy that the servicers have compared to 2008.
Sure. So I think Fortune magazine published an article back in 2008. The unemployment levels were 15 million, peaking at 15 million. The last 5 weeks, you're seeing 26 million, right?
15 million. That's we wish actually we could have 2008 again.
Exactly. And so that kind of volume, that increase, that pressure is falling on the shoulders of your phone channel folks that are answering the calls. It's falling on the back office. And I will say the empathy is still there. And it's important to remember that, because I think folks are getting frustrated with the long wait times, and they're doing the best they can with the tools that they have. And so I think another stat that came out from CBS News was 16% unemployment in September. These are big numbers, and I don't think we should look at them as something that's scary, but kind of a rallying call that the strategy's got to be a bit different. Empathy needs to be at the forefront of it, whether that's a person or whether it's a solution or a strategy. But I think with these kind of numbers, 3 million forbearances, 2,000% increase in requests for help is what these folks are seeing. And they need tools to be able to navigate through this. It's challenging, but they're tired too. The back office folks are tired too, trying to keep up and figure this out. And that's where, as an industry, I think the collaboration will go a long way in doing better.
Which, I mean, and here's the crazy thing about it. We just hit an all-time low for foreclosures. So I'm going to guess that a lot of servicers have they've probably cut some of their staff. Like, so here actually they're facing this situation where they said, hey, listen, I don't think we need to worry about actually, loan modifications or loss mitigation as much as we used to. So let's let go of some people. And then coronavirus comes and just changes actually all the rules again.
Yeah, absolutely. I mean, the numbers we just talked about for the folks needing help, even if you had staffed for the 2008 levels, you would still be understaffed. So it's really not realistic to throw full-time employees at or people at the problem, because it's impossible to sustainably scale in that way. There's cross-training and there's pulling resources in to kind of stop the bleeding. But the larger impact, I mean, the 2008 crisis, we talk about it as 2008, but we felt that right through 2014 through loss mitigation. And so I think as the economy improved, default rates were lower, foreclosure rates were lower, people shifted. And now I'm not sure that we made enough progress on the technology side, so that in the event of another crisis, we were a bit more prepared. So that part looks very similar to 2008. As our response to an influx of hardship could have looked a bit different, I think, if we had invested our time into technology.
So, I mean, 2008, a lot of people were saying, actually, well, what did you expect? The servicers were, using COBOL mainframes that were basically systems that were designed to accept, defaults, of 1% or lower. And then all of a sudden, we're starting to hit double digits. It was very difficult to adjust quickly.
Sure. Yeah. Replacing a mainframe is complicated. And I think that's another key point to remember. During a crisis is not the time to replace infrastructure. That would be irresponsible. So instead, I think it's about, can you collaborate? Can you let the system of record do what it's supposed to do? Can you let the collection system do what it's supposed to do? And then can you fill in the gaps? Can you apply technology and as a tool, not a total overhaul or replacement, but a tool? And I think that's where we need to focus more of our conversation. And we don't have months. This isn't a problem that you can solve in months and years. This is a problem that you have to solve now, because all of those folks that got the initial 3-month forbearance, 6-month forbearance, they're coming back in June and July and August. And hold time is one thing, but what do you say when you answer? That's where we've got to be focused now. Is what's the answer at the end of this immediate relief period?
Yeah, I mean, and it's amazing how I mean, things were so ugly back then. Like the advancements that we were excited about, like single point of contact. Like, yes, you mean I could talk to one person, and that's the same person I'm going to call back and talk to again, and they'll actually have a file with my records and information on there. In 2008, little things like that just seemed wonderful.
Yeah, totally. Relationship collections, and you call on an auto loan, and you can also call on the mortgage. Like, yes, but there's so much more that can be done. Just look at the progress of automation and data aggregation and analysis that's been applied on the front end. Those tools can be applied to help after the origination component as well.
Interesting. So talk to us a little bit about it. What are those tools? What are the tools that can be used?
Sure. So if you think about, and again, bring it back to the customer, right? That's what the point that you're solving for has to do with a person. And so when you look at applying these tools, it's not enough to just apply, big data. It's use that as a part of the solution, but really bring it back to look at that customer. So you've seen things like sentiment analysis applied on the origination side. Automated underwriting solutions have been applied. So you can use those in combinations to really get a picture of your borrower that's sitting there asking for help. The the process of going through asking for help is super personal. And so the more you can give them the tools to kind of serve themselves and be super honest and transparent, it's different if you're doing that in the comfort of your home, on the computer, working through this in your own time versus calling a total stranger and sharing very personal details about financial struggle. And so I think that's the real opportunity is, can we empower these borrowers to engage, these homeowners, right? People to engage in this process and feel safe being transparent. And then not let them down when we have collected all of that information and say, okay, look, we understand what's going on here. Here are some solutions and let's work through that path together. That empathy can be applied with technology.
Interesting, but you still have to have a physical person on the front lines answering the phones. Like
You don't. So that's the self-service tool. You can, but if you think about the same conversation, if as you and I are having, imagine that you're in a chatbot solution and you're having this conversation, but you're driving it. Those solutions can be there where you still keep the personal interaction, but you do so through technology and application of technology.
Interesting. So listen, me personally, whenever if I'm in a chatbot or listen, if I'm in a phone tree, if I'm calling something up and I'm finding out the answers and I'm not happy with those answers, I'm hitting 0 agent. I'm doing whatever I can texting because there's no way this machine, at least that's what I'm thinking. There's no way this machine is going to figure out the best case solution for me. And and do you find actually are borrowers doing that? Are borrowers when they're coming into a system like this, the constant AI system, is there a high number of people that are trying to get out of the AI system and speak to someone live?
Yeah, I admit I do the same thing when I get on the chatbot and I just want to hit 0. So someone will hear me, and that's a perfect point or distinguished feature from Constant, right? Or anyone trying to build this out. A lot of folks are like, I can build it, I'll do it myself. Well, that you have to have the human component in there, or you are going to just get a bunch of zeros. £0 get me to a person. So it's having the experience, not just with the banking industry, but also with people, to be able to form a solution that still doesn't lose that engagement. You don't disconnect from the borrower just because they're engaging differently. You want it to feel like they think that my face is on the other end of that chatbot and that I'm personally responding to them. Those paths are complex. It takes a lot of work to be able to think through all of the scenarios and all of the really personal ways that hardship analysis could go.
So, what are some of the human elements, or the empathy that the system will do to kind of let the borrower feel like they're being handled by someone who actually is more than just a tree of options?
Sure. So I'll give you a kind of a real-time example, I think. So if you think about the forbearance options that are being offered across the board right now. So the industry has waived the due diligence requirements, and I totally understand. I was watching David's interview with you last week, and he said, you don't want to have the same black eye from the last crisis where people didn't get help fast enough. So we totally switched gears, and now everybody gets help. So one example of not having the empathy applied to the strategy would be at the end of that 6 months, where someone came to you and said, I've been impacted, I have a financial hardship. And at the end of the 6 months, you come and you hand them a bill for the last 6 months of the payment. Or you say, hey, go on to a repayment plan and pay a payment and a half or 2 payments until you get cured. That is an example of a disconnect, of not having a common sense solution built into the off-ramp of providing relief. You're making it worse. And so those are the things that I think, pay attention to the ability to pay. And it's not everybody has the same solution. So of course, if you apply the same playbook, folks are going to fall through the cracks there. You've got to be able to get a little bit more precise in understanding that hardship and then recommending the solution that goes along with that hardship. So if you haven't been making any money for the last 6 months, it's very unlikely you can pay me 2 mortgage payments on month 7, right? So let's step through when you expect to turn back to normal, if you expect to turn back to normal. What do you think you can pay over the next X amount of months until we can get you back on track? And that takes a lot of collaboration and a lot of time. And this is where I have sympathy and empathy for the folks on the phone. They also have a backlog of clients waiting for their phone call to be answered as well. So doing that with a person, probably not sustainable. Doing that with an automated tool and some level of artificial intelligence makes that a little bit less challenging for the servicers and the lenders. And the
So, I'm sorry, I didn't mean to cut you off there.
Go ahead. And the customers was all I was adding.
Yeah. All right, that's great. So it's actually listening, analyzing actually what's being said or typed. But are there any little cues that it does, like, emojis? Are there things to do to add like a personal element, or is that a little a little too hokey and borrowers get turned off by that and see through that?
No, great question. The biggest thing is they're adults, and so we want to treat them like adults, and we don't want to like discredit the severity of their hardship. So we've there are multiple ways to accomplish that. We've done ours with a chatbot solution, and someone that you're engaging with Dan, who is super approachable, and there's a face behind that. So that's one way we use very plain language to engage and really make sure that they feel connected. It's the way we speak too. It's our culture at Constant. So we're humans, we're people, and we're just trying to figure this out. And so that's helped us in being able to maintain the engagement, I think, of the folks on the other end.
Wow. So when you start to look at some of the things that AI does, are there any things that you could think about that really kind of wow people when they're just like, I didn't even think about that? There are things like, see, whether it's your systems or just AI overall, what are some of the things that these systems can do that just humans just can't do?
Sure. One is it's a combination of data points. It's not just one data point. So I always use the example of like a FICO score. You're not going to know a lot about me by my FICO score. You might be able to put me in a bucket, but it's not enough to be able to really understand. So what artificial intelligence can do is take multiple data points, create some assumptions and some logic, and create a more precise picture of your ability to repay or your willingness to repay based on aggregating that data. When a human does that, it introduces a lot of bias. Not to say that AI models don't. You have to be very careful not to allow that to happen. But it can allow you to move a bit more quickly and actually reduce some of the subjectivity of a human doing that. So that's just an example of getting to a clear picture with less bias and kind of more informed analysis of where you're going next. Still have to have the borrower there, but you can help guide the right solution with data.
So can you dig into that a little bit more? What are some of the subjectivities that an individual human representative will have, and how that could impact a decision for a loan modification or any kind of loss mitigation tools that we have?
Sure. Self-employed folks are probably at the biggest risk. So it's one thing to calculate somebody that gets paid every single 2 weeks and they have some sort of consistency, and maybe they're receiving unemployment, but they step back up to being a wage earner. That's not the case for small business owners. I grew up in a self-employed household, and this is different. Coming out of this is going to feel different for small business owners, and so you can look at deposit accounts. You can look at last seasonality from a prior time period. You can prompt questions to ask them. Just ask them. What do they think about their business? They run it. And so you combine this, borrower perspective, borrower answer, and then you try and challenge or support it with data and assumptions. And that could be multiple data sources, not just saying, oh, well, I went and tried to find your paycheck and I can't find it, so you're denied.
Wow. So does now, and I'm going back to the self-employed thing, because that is really just blows my mind. How, so you're saying actually that the AI can actually go deeper into a conversation about it. So I see you're in this line of work, and they'll ask targeted questions around a business in that line of work.
Sure. Yeah. So that's the challenge I think that we're facing as an industry is can we go a little bit beyond? Can we do better? And there's still time to do better than one size fits all. So a 6-month forbearance does not help every single person that's getting the 6-month forbearance. So now when you come out of that, can we start by acknowledging, okay, you're self-employed. So we're not going to ask you to upload 2 months of your pay stubs. That's different, right? And so you go down a different channel based on the input that you got from the consumer, just as an example.
Wow, that's amazing. So listen, I want to gonna switch hats here for a second. So what kind of personality does it take to be someone who would be actually that collector? Like the person who is going to be the person that's on the phone, that's saying, "Hey, listen, you're late. What can we do?" What is the personality traits of someone who does really well in that?
Great question. So probably a little partial because I ran a collection shop.
Sure.
But they are super resilient, and probably in times like this more than ever. So there's pressure from both sides, right? There's an efficiency and performance expectation of getting through calls and answering and staying on task. We don't have time to talk for 30 minutes with every single customer that calls in. So the real skill set is somebody that can establish the relationship super fast, establish a sense of trust, and so that you're not just talking about things that they think you want to hear, but things that will actually help you resolve the problem, which is continuing payment. And so that's where I mentioned earlier in the call, it's kind of a sales pitch. Like you really want to help this person see that it's in their best interest to be open, to share, and to get that account back on track. But it takes patience. You got to have thick skin. Sometimes it's easy to blame the collector on the phone, and they are not responsible for COVID. So it's important to remember.
Now, are there any things that you can build from actually that personality traits of the collector that you can or build into the AI solution?
Sure. So one example is, and this is true of any phone channel, but what are you going to say when the customer picks up? If you are going to ask them the same series of scripted questions so that they can tell you, yes, I'm still unemployed, it's kind of like salt in the wound. So can you be more precise with the information that you learn and gather through each interaction, and then tailor the strategy, right? So, and this is entirely up to the investor, the servicer. There's extremely complicated amounts of work that go into the collection strategy, but for the most part, it doesn't make sense to apply a person in perpetuity on a dialing campaign to ask the exact same question and get the exact same answer and then reschedule the call. That's how collectors get a bad name. It's not their fault. It's just they're spinning the dialer.
Wow. So let's talk about actually, down the road when the forbearance period ends. Talk about actually, the servicers being prepared. Like, what can they do? Because, like you said, actually, the end of the forbearance period is going to come, and they're going to be faced with the options. What do the services need to do to kind of prepare for that? Because that is going to be the deluge of phone calls, and that are going to swamp them. And they're going to make it so Hope Now Alliance has to set up big events in stadiums to hopefully that's not the case. But what can servicers do today to prepare themselves for that eventuality that's going to definitely happen?
Yeah, I think one is being super honest with their playbook, about their playbook, and is it the right playbook? And if it isn't, that's okay. So if one size fits all is not going to work, I think as we get further into this, we're going to unravel extremely complex hardships. It's not just somebody can pay and somebody can't. So are you prepared to have that conversation? And by having that conversation, are you assuming that you have enough people to have it, or is there another way to have that conversation with technology? So are you prepared? Is your playbook the right playbook? what are you going to say? No matter how you engage with that borrower, what are you going to say when you pick up? And will it help? So addressing that now, and there's still time to do that, I think puts us in a better position than probably 08, 09, just that level of transparency. The other thing is I think there's some confusion around who's calling the shots. It's pretty clear when it's a GSE-backed loan, a government-backed loan, but there's a lot of other products out there with fintech lending making such an impact on the market. There's a lot of other debt. So, being transparent, talking to the investor, the servicer, there's a lot of players in the life cycle of managing a loan. And I think the more we open those lines of communication and collaborate, the better off we'll be. It's not one person fixing it. It's not just the servicer's fault. It's not just the lender's fault. And it's hard work, but I think we've got time and we can do better than we did in 08. Fantastic.
And so you said something there before that you don't mess up you don't I forget exactly the words used, but don't actually switch your strategy while you're under the stress of having all the forbearance calls. So are you right now, if someone comes to you and says they're a servicer, they say, hey, listen, we love your technology, we think actually we want to put it into place, are you saying, wait, you should take a pause? I hate using that term here, but take a pause and let's talk in a month so we can prepare you for that eventuality of the 6 months down the road when actually the loss mitigation tools really come into play?
Yeah, great question. No, I will never say that. So we can. So
okay. That's great.
We have designed our platform to integrate because the idea of having, so you mentioned like green screens and antiquated servicing platforms, the timeline and the investment to replace that servicing platform now is totally not the right time to do that, right? There's so much that goes in and you're 18 months out and millions of dollars out. This is, our tool would actually integrate with that existing green screen, and it supplements some of the shortcomings of more antiquated platforms.
So we can
collaboration.
So we can bolt on AI on top of a Cobalt system?
You got it.
Wow, that's wild. That's great. That's very cool. Very cool. So listen, I really appreciate you taking the time to meet with us, talking to us a little bit about some of the things that you're going through. I mean, are you guys very busy right now with inquiries? I mean, what's actually the deal flow volume looking like for you guys these days?
Yeah, there's a lot of inbound traffic, a lot of interest. We want to help as many people as we can, and we're reaching out to our partners too to say, hey, we've got the software pretty much wrapped up. Let's help get this to more people. So that's the goal. There's people at the middle of this. There's a huge crisis. It's impacting everyone. Everybody needs to be a part of that solution, and we're really thankful for the chance.
Fantastic. All right. Listen, I really appreciate it. Tell us if someone actually wants to get a hold of you, Carissa, what's the best way to do that?
See Robb at constant.ai.
Fantastic. All right. I'm going to take our viewers out here. Stick around for just a minute. All right. Again, everyone, thank you for joining us for another Mortgage Leadership Outlook. Super excited. Tomorrow's guest, Matt Ishbia, the hero of wholesale, the legendary former, actually, guys are mortgage brokers that have become the #1, wholesale lender by like so much daylight. So excited to have Matt on tomorrow. There's no one that has more energy and has more raw than Matt. And we're going to hear about his perspective. Listen, I think mortgage brokers are in a great place actually in the industry right now. I'm going to bet that Matt is going to agree with me on that. Later on this week, we got Jerry Schiano. So excited for have Jerry join. And wrapping up on Thursday, we got Patty Arviello. So please make sure you share this. Tune in every day at 4 o'clock Eastern, 1 o'clock Pacific time. Thank you again for watching. We really appreciate it.